Welcome to Endgame Finance. Today, guys, I'm going to talk about Rivian, General Motors, and Tesla. These guys are trying to be the dominant players, and today we're going to go over and look at some of their numbers. First up, we have General Motors. General Motors actually did pretty well. Their Lyriq sold over 3,000 units. Their Bolt EVs and Bolt EUVs have hit over 15,000 units. So Silverado EV just produced only 18 units. Hummer EV over 1,000 units. BrightDrop has produced around 35 units now. BrightDrop is the General Motors electric van. This is a direct competitor to Rivian's electric delivery vans. So it's going to be really interesting following these guys, following who actually gets the dominance of the electric van market, which is a multi-billion-dollar market. General Motors third quarter sales, 15,835 Bolts and 4,222 Ultium models. Now, basically, these 4,000 units, these are the SUVs that are competing with Rivian, and these are some of the most difficult vehicles to produce. I would assume that General Motors actually has a negative margin on production of these models. If you purchase this vehicle for $40,000, it basically means it costs around $80,000 to produce. So General Motors has a negative margin around 100%. Now, I'm not totally positive on this. However, this is just an assumption just by looking at Rivian. Now, let's look at Rivian. Rivian produced 16,304 vehicles and they delivered 15,564 units. Their quarter three production delivery results remain in line with their expectations, and they believe they will produce and deliver 52,000 units this year. That's pretty significant considering this company just entered production and they're already producing these vehicles at such a fast pace. Now, I still believe they're losing around $33,000 for each unit. So these guys still have to do a lot of work on their margins. And I believe with scaled production, once they hit around 150,000 units, they will be around break even or even profitable, especially now that they're sourcing a lot of their parts in-house. They're producing their own electric motors and some battery work is also done by them. I believe their software and hardware computer on board is also produced in-house. So all of these cost savings will propel them to profitability, I believe, sometime within a year or possibly by the end of next year. Now, if Rivian is losing around $33,000 per unit sold, you can also assume that General Motors and even Ford are losing about as much or if not more. Just because these guys have been in the car game for a while, it does not translate well into entering electric vehicle markets because electric vehicles are primarily a technology market. They're primary batteries, they're primary electric motors, their computers on board, their software that's supposed to work perfectly and flawlessly with those computers. So it's very difficult to assemble an electric vehicle. It's basically a computer on wheels. Now, Rivian VP of Commercial Operations says, Q3 marks another milestone as we continue to ramp deliveries while adding more variety to our fleet. Most recently, adding our dual motor to the R1 platform. It has been truly incredible to see record after record fall as we achieve our most successful day, week, month, and quarter of deliveries, respectively. We're excited to enter quarter four with the same energy and focus to close out 2023. So these guys are pretty optimistic that their scaling is on track, and I'm very optimistic about Rivian as well. I've been a shareholder for a while now, and I don't see really any red flags. As long as these guys continue to produce results, as long as they're ramping production and proving there's actual demand for their vehicles, I believe they will be profitable pretty soon. And I see a bright future for them, especially once they enter other markets. They're only in the United States so far, and they still have a backlog, I believe, of over 100,000 units. Imagine once they enter Europe, Australia, once they enter Asia. I believe this backlog is probably realistically over 1 million units that they can sell right away if they were servicing European and Asian markets. However, these guys have not ramped production yet, so they're sticking to the United States market. Once their R2 platform is online, I believe this will also drive demand for millions and millions of units. So I'm extremely bullish on Rivian. You just have to be patient. This can play out over the next 2 to 5 years. So if you're looking at short term, you might get burned. Now, Ford has not released their data yet, or I was unable to find it when I was recording this. Ford had to cancel all dealer stock orders of 2023 F-150 Lightning after quality control check. Now, this is not good. If they're not passing quality control, it means they're defective units probably. So Ford is really showing just how difficult it is to produce electric vehicle trucks. Now Rivian has really overcome this hurdle. You're not really seeing or reading any news about Rivian having massive problems with their fleets, with their electric units. So this is a huge boost of confidence in Rivian for me personally. Now, a lot of people are saying that Ford is simply not sending any of these units to their dealership because the dealership markup is eating a lot into their margins. Basically, Ford is selling this vehicle at a huge loss. Like I mentioned, pretty much everyone is so far. Rivian will probably be the first company besides Tesla in the United States to sell their trucks at a profit, which will come next year. I'm not sure General Motors and Ford will be able to sell any of their trucks profitably in the near term future. So Ford is basically saying they're trying to cut out the dealership networks that are taking the percentage of each sale because Ford is not making any money. If they're not making any money on these cars, there's no point in paying dealership a markup fee. Tesla and Rivian don't even use dealership. You just go on their website, you configure the vehicle and it gets delivered to you or you go pick it up. Now, that's the same thing Ford is trying to do because just a few percentages of markup really eats up that margin, especially if you're selling at a loss, especially if you have shareholders that are getting very upset that you're not selling a product at a profit. So Ford is probably having a lot of quality control issues, probably some safety issues, and at the same time, they're really just not trying to work with dealership networks anymore because there's no point in sending these vehicles to dealerships if a person can just buy them in real time, if they can just go on a website, state what they want, have it built on their specifications, and have it delivered. Now, let's look at Tesla. Tesla actually posted pretty big numbers. However, it was a small decline from the previous quarter. However, Tesla did indicate on the previous conference call this will occur because their factories will be shut down for retooling for upgraded models of the Model 3, and I believe for some improvements for Model Y. They're still really producing huge results. Last year in the third quarter, they produced 365,000 units. This year, they produced 430,000 units, which is still a huge beat. However, I do see a huge slowdown in production deliveries of Model S and X. S and X is their premium segment, and these are the models that are competing with Rivian. And I believe Rivian is really eating into this segment. So Tesla is really not seeing any slowdown in demand. For models S and X, definitely because they're competing with Rivian now. However, Model 3 and Y, those two models are probably some of the best selling vehicles in the world. And I see this continuing in the near term future just because they haven't even entered all the markets yet in the world. And this Tesla keeps ramping production. Their production is getting so much cheaper that they're able to discount a lot of models. Now, a lot of these discounts are being forced by the Federal Reserve rates because if people are buying cars for 10% interest or 15% interest, they're most likely going to wait for a while, as opposed to if these cars were at 2 or 3 or 4% interest. So Tesla is really being hurt by Federal Reserve. And if this wasn't the case, I can still see Tesla dropping their prices, maybe not as much, because it still is hurting their margins. However, Tesla has gotten their production costs so low and their volume output so high that they can really price out their competition out of business. So in the near-term future, I'm not really optimistic on GM and Ford just because they really haven't jumped in with both feet into the electric vehicle markets. They really haven't committed to this technology aspect of vehicles that Tesla is really dominating. So Tesla will continue to be a leader in this. And I see Rivian as a close second in the upcoming years, especially with their R2 platform. So that's it, guys. Just want to give you an update on deliveries and the overall electric vehicle market. If you guys have any questions, comments, or concerns, let me know. Guys, like, subscribe, and as always, have a great day.